Good morning, and welcome everybody. Here we are live again for the third day of August, August 3rd, 2023, for the Premarket Prep session. This being our daily session where we go over any and all info necessary to keeping you consistently profitable. Losses will come. They always do. They're the only thing that's guaranteed about trading, investing, anything. But the important thing is making sure that you stay consistent with investing in self and making sure that the gains will, number one, outsize the losses, and number two, be more frequent. Even with them being less frequent, I know people who have under 40%, under 50% hit rate, it's just the wins are large, right? And they make sure that they keep the losses small, the wins large. And what allows us to do that is the system and also the mindset. Part of that mindset component is being here, being locked in, taking in the information, making sure that you have the lay of the land for the week, and then executing based off that. So good morning, everybody. Good morning, Viv. Good morning, Carla. Good morning, Miss Wynn, the Indomitable, right? Good morning, Miss Gatlin. Amazing to have you guys here and to dive into another day, right? That's what we're here to do. What is it, Thursday now? I feel like this week has been flying by. Ches, Big Ches, good morning, brother. Hope you're doing great. And to everybody who's watching this via replay, good morning to you, good afternoon to you. Whether you watch this in the morning or not, there's still value to be drawn from it, to be extricated from it. So make sure you're doing exactly that. What do we got going on today? Trying to get 1% better, right? So make sure you comment that. Drop a 1 in the comments signifying your intention to get 1% better. I wake up every day. I pray. I get my confessions in, right? And this is, you can consider that part of your confession, right? This is what I'm trying to do. This is what I am here to do. And I'm setting that precedent so that there is no mistake to be made, right? I'm not here to hang around. You guys are awesome, but, it's not a social club. We're here to get better, right? We're here to get better, and we want to put that intention forward each and every day. Now, let's see what we got going on here news-wise for today. All right, and we're heading into the kind of part two here, big tech part two. That's our top news. We're talking earnings. So last week saw the first round of results from big tech giants with accelerating growth at Google, Meta's focus on AI, and worries about CapEx at Microsoft. Up next are the quarterly numbers from Apple and Amazon, which will arrive after today's closing bell. Investors and economists alike will be eyeing the figures of the two companies that have a global workforce in the millions, consumer and business revenues in the billions, and market caps that keep going further into the trillions. So Apple, the stock is already up 54% this year, and the firm's view on many of its business verticals will provide a broader economic picture. Service results like the cloud, App Store, Apple Music, Apple Pay, etc. will be closely monitored, as will levels of iPhone shipments and price hikes of Pro models. That is the big key. Apple has been struggling to ship out the iPhone. We've been seeing, it might be in the back of your mind, you might remember it subconsciously, but we've been seeing these little headlines of updates of Apple not being able to meet production demand on its new iPhone, in some cases halting it, pushing it back. That accumulates, and then it shows itself, bare in face, right? It shows itself in the earnings report. So I think that is something that could cause Apple to have a rare miss, right? Even if it doesn't miss, it could cause it to have negative guidance. And we already talked about Apple yesterday, right? Apple being in that big falling wedge, and we lost that wedge yesterday. So as of right now, the bear train is rolling on Apple. Earnings could yank it out of that, right? It 100% could. But if earnings is bad, Apple could tank, like absolutely tank. So, it's one of those things where you can place your bets, you can pick your horse. Apple rarely misses. They don't have to miss to go down, but the elements are there, right? I just want everybody to understand that at the least, I'm not going to go throw in the mortgage on calls for Apple this time around. Right, so back into it. Also listen to the conference call for mentions of artificial intelligence, the new VR headset, status in overseas markets like India, and the potential impact of an escalating semiconductor war between the U.S. and China. Now, that's for Apple. Let's look into Amazon. The e-commerce behemoth has similarly had a big rebound year to date, with shares soaring nearly 50% over the course of 2023. Amazon is coming off its Prime Day in July, which was the single largest day in its history, while it pushes into pharmacy, its pushes into pharmacy and grocery will likely be discussed. That was my big thing that I didn't want people to forget, is that Amazon had its single largest sales day ever with this past Prime Day, which is huge. And then also them with Amazon Bedrock and their AI, they say that there's a lot of, clamoring for demand for its AI. And, I'm excited to see if they stress that. In terms of Apple, just based off of the sentiment that I have, I'm leaning more bearish for Apple, more bullish for Amazon. But also Amazon can run into some of the same problems that Microsoft did with Microsoft Azure, with their cloud business. AWS, Amazon Web Services, is a huge part of their business. It's like the driving growth factor part of their business. And the cloud business was slow for for Microsoft, and didn't have like the best outlook moving forward. And that might be the case that slows down Amazon here. So, you can look into it a little bit deeper, see exactly what it was that caused Microsoft. But at the end of the day, right, you can do so much research and theorizing and this and that. At the end of the day, I've done it, right? You're just going to end up burning those brain cells out. So for the sake of like kind of staying on top of macro trends and fundamental trends that are affecting these companies, sure. But like in terms of trying to figure out if this is going to cause the stock to go up or down for earnings, very tough to know. Always a crapshoot, right? So back into this for Amazon. However, the most important metrics will likely be the outlook for Amazon Web Services, the company's cloud computing platform, as well as whether strength in streaming and advertising will be offset by slower consumer and enterprise spending. So yeah, all eyes on cloud. And because all eyes are on cloud for Microsoft and it didn't come up, as strong as people had hoped, that's something that, Amazon is definitely going to be under the microscope for. In terms of seeking alpha commentary, Amazon shares are attractively valued for continued accumulation, though one can never know what the market will do as earnings approach, right? Seeking Alpha analyst Wealth Insights. Meanwhile, Business Quant sees Amazon poised for a Q2 beat, and Jamie Galvin says growth and margins are among the three key items to watch in the results. With regards to Apple, ticker AAPL, TradeVestor also gives a preview of the iPhone giant that explores valuation, technical strength, and recent revisions. So we'll get both of those after the bell today. Very exciting, especially because the market itself is in a bearish spot. So if these two do well, they can yank us back from the precipice. If they don't, then they will just further compound the blood that is already in the water that we've seen the past 2 days. So I mean, you can't pay for a pay-per-view that's better than this, right? This is like box office smash type, events that are going on, and that's why we got the show lights in the background. Like it's crazy what we got happening, but it's fun, and I'm excited to see how things shake out. In terms of economic news, downgrade reaction, the market reaction to Fitch's downgrade of U.S. debt reflects puzzlement over its timing, but indicates confidence that government securities and the dollar will remain safe havens. We expect that after the initial negative reaction in markets, investors will largely disregard this move, said 22V Research's Kim Wallace, as there is no threat to the dollar's reserve currency status and no roadblock to servicing debt. That could explain why the market isn't taking the downgrade as badly as it did when the S&P cut its U.S. rating in 2011. Treasury Secretary Janet Yellen called the downgrade arbitrary, while JP Morgan CEO Jamie Dimon said it was ridiculous. I do think it was just annoying and random timing. It's like, okay, for what? Right? It's like when, I don't know, this like celebrity comes out and says, oh, back in the day, like this person was mean to me or they just weren't nice. It's like, if Pharrell, blew you off in 2010, who cares, right? It's 2023. It's like the same thing with this. Like nobody cares about you, Fitch's downgrade and all. Like you're just, what are you doing it for? Like, what are you doing? Just be quiet and sit in the background. So yeah, it was kind of one of those things too. And to do it like after hours, what is the point? What are you doing all together? So a lot of people don't really care much about the downgrade. In terms of kind of expectations, it is important to note that a number of, and especially one particularly who is on the like Senate Finance Committee, one senator of, I think he's a senator of Delaware, took a 30, it was either a 30 or a 50K short position, like against the market. He bought up, an inverse QQQ ETF. So this dude's expecting the stock market to drop. He did that like mid-July. what was it, July 21st? It was like mid to the end of July. But, same guy went and bought $100,000 worth of shorts in March of 2020. So, he's on the Senate Finance Committee. It's literally like illegal. Like, it should not be fine for him to do this, but he does. But anyways, it's worth us taking note, right? We see the market being shaky. We see Apple, a $1 trillion company that's in, this very, very large falling wedge. We see all the writing on the wall, right? So as of right now, things definitely lean bearish. I'm not going to go and make moves exclusively because somebody bought 50K worth of shorts. He could have 500K worth of longs, right? And this is to protect him. So you never know the full picture. You never want to make moves based off of not having the full picture. But we also do have enough to show us that in the technicals, things look bearish, right? Which is why we got the put call out end of day to swing, and why NVIDIA and Apple, puts were on the docket yesterday and heading into today, because the market looks bearish, right? Now we could get whatever after close today because we got Apple and Amazon reporting, but it's definitely bearish as of right now. Now, in terms of bonds here, billionaire investor Bill Ackman is betting against 30-year U.S. Treasuries, calling it a hedge on the impact of higher long-term rates on stocks, as well as a high probability standalone bet. Quote, there are many times in history where the bond market reprices the long end of the curve in a matter of weeks, and this seems like one of those times, he projected. Ackman also noted that if long-term inflation is 3% instead of 2%, the 30-year yield could reach 5.5% soon. Ackman is not alone, as hedge funds have been shorting treasuries en masse, while the Treasury just increased the size of longer-term debt sales to address mounting borrowing needs. And continuing here, because I want to make sure we have plenty of time for the pre-market analysis. Financials news, high yield savings, and a new milestone. The Apple Card's high yield savings account offered by Goldman Sachs has reached more than $10 billion in deposits, which is huge because, again, like, what does that do? It gives Apple access to that capital, right? It's like the same thing for Starbucks and all that. Starbucks is a bank. Apple is now a bank, right? And it works with the bank. It works with Goldman Sachs, but still, the ability to, kind of dole out $10 billion is nice. And they're already a company that sits on humongous cash reserves. So the savings account offers Apple Card users an APY of 4.15%. And since the launch in April, 97% of savings customers chose to have their daily cash automatically deposited into their account. Goldman won the Apple Card account in 2019 when it sought to build itself into a consumer finance powerhouse, but has since scaled back its consumer business amid mounting losses. And there have been chatter and rumblings of maybe a breakup brewing between Goldman and Apple. We'll have to see. While Goldman seems committed to Apple Card for now, the bank has reportedly started talks with American Express to offload the credit card deal. So, that right there, I just mentioned it. They might not be in it for the long haul. So, we'll see what happens. It looks like Goldman tried to make a foray into the consumer space, and they were like, oh, this kind of sucks. Let's go back to dealing with institutions and companies and things like that. So huge milestone for Apple. We'll see if it does anything, for the stock price here today. Again, they might just be releasing that before earnings because they know that earnings is going to be, dismal. I could definitely see that happening. Companies a lot of times like to release info before earnings so that they can maybe get a little run up. They're like, guys, please buy us before we get gobsmacked into the depths of the red abyss. So yeah, Apple. I just want to see what happens right after the bell. Should be very fun. Today's markets literally all red except for China. China is the only green. So in Asia, Japan we're down 1.6%, Hong Kong down 0.7%, China up 0.6%, India down 0.8%, the FTSE in London down 0.6%, Paris down 0.7%, Frankfurt down 0.8%, the Dow down 0.2%, S&P down 0.3%, NASDAQ down 0.4%, crude oil down 0.2%, gold down 0.3%, Bitcoin down 1.3% to basically 29K. We did get data. We got jobless claims at 8:30 a.m. We get PMI data at 9:45, ISM service index at 10. So 9:45 and 10, we do have little blips of information that are coming out. Let's see what we got in terms of this employment data. Man, I need to get this beard/mustache under control as well. I got these little wanderers creeping over the lip. That is the worst. But I'll get my barber to take care of it. We're locked in for tomorrow morning. That's another thing. I will be probably, what is it? I'm pretty sure my appointment's at like 10 or something. I don't know, but I probably won't be actively trading in the morning, so I can just get it out of the way and then be there for the afternoon for Friday. But I think like right at open is when my appointment is, so I'm trying to get in there and get out and then be able to see the majority of what's going on Friday. Okay, jobless claims due at 8:30. Where's the data? So okay, so non-farm productivity. Okay, here we go. I just couldn't see it. I'm legitimately blind. U.S. initial jobless claims actual 227,000 versus 221 previous. The estimate was 225,000. So we have the jobless claims worse than expected, which is bullish for markets. We have U.S. continuing jobless claims actual 1,700K versus 1,690K. Previous estimate was 1,708. So the continuous jobless claims was less than what was expected. The initial jobless claims were worse than expected. So it seems like kind of a mute point, right? Maybe like a cancellation, a cancel out. Again, if you have worse than expected jobless numbers, that's good because it means that, the Fed might have to pull up on their interest rate hikes because their dual mandate of maintaining full employment but also decreasing inflation. One of those two things could now be in jeopardy and be more in focus. Let's see. Overall, do we get any type of movement from the market during that? Where is it at 8:30? Not really, right? Just kind of chop. So yeah, we'll see how things shake out today. But we go into the day bearish. It's important to remember. We talked about Nvidia yesterday, right? Nvidia came in with some nice plump put dollars yesterday for us, and Nvidia has the chance here for a very nice and crisp daily double top if we get a close beneath 439.90 today on the daily. So I'm watching out for that. Let's see. Let me go and get the exact area because 439.90 was our previous bullish breakout. 440. So 440.4. That is the level for Nvidia. If we close beneath 440.4 by end of day today on Nvidia, Nvidia can fire down. And as we know from yesterday, Nvidia can pay heavy both ways. Nvidia can run to the upside crazy and it can drop crazy. So we'll be locked in and kind of observing what we've got going on today for NVIDIA, right? What we've got happening there. It'll be a fight. It'll be a battle. And we'll see which one will win, the Bulls or the Bears. We just got some news too. Saudi Arabia will extend voluntary oil cut of 1 million barrels per day for another month to include September. Voluntary cut can be extended or deepened. So it looks like, Saudi Arabia is trying to make sure that they continue to pump oil prices here by cutting and keeping that cut, maybe maintaining it for even longer. In terms of what else is happening, we'll finish up here with our rapid fire bullet point rundown. Let me check, make sure we got no questions. All right, cool. No questions. We're going to keep it pushing, keep it trucking. So what else is happening? Salesforce, ticker CRM, lays off more employees after January's purge. WWE in choppy trade after Q2 beat McMahon subpoenaed. Cruise stocks fall as Norwegian Cruises outlook disappoints. Chipwatch, Qualcomm stumbles on weak Q4 guidance. Might be important to look in on, right? Just seeing, okay, we had these semiconductor companies that were crushing it at first because of AI, and then now they're like, So important to take note of, right? Maybe go back and look up, okay, what happened with AMD, right? What was the, what caused it to drop? I mean, AMD's chart yesterday was just crazy, like kind of borderline hilarious, but just crazy, where it was just, up for earnings and then down and then just literally tanked. And it wasn't even like they had bad earnings, but just absolutely tanked. Shopify beats on Q2 sales. Stock fluctuates after hours. And that's why, like, Shopify, again, like online e-commerce, like with Shop, I feel like Amazon encompasses parts of all of these different businesses. Shopify, Microsoft. So it's like seeing what their stocks did post earnings, I think is important. And Shopify and Microsoft so far do not bode well for Amazon, right? We have Shopify that's currently down. We have Microsoft that was down after their earnings. So as of right now, things not looking hot for Amazon. And if we get a miss on Apple and a miss on Amazon, peace. The market is out, free falling. Let's see. Okay, cryptocurrencies dip as DOJ mulls fraud charges against Binance. AB InBev, ticker Bud, BUD, volumes decline as Bud Light drama weighs. PayPal, ticker PYPL, slides amid inline earnings, fewer active accounts. Q2 miss recorded at Occidental Petroleum, but production guidance raised. CVS Health, ticker CVS, is in restructuring mode amid a hit to Q2 bottom line. Then DoorDash, ticker Dash, DASH, rallies after tallying record number of orders. Good for DoorDash. I'm sure I'm definitely adding on to some of those orders now. Oh my gosh. Look at that. The pop was sold off already. They're going to open at like break even. Wow. Well, I retract that, DoorDash. I mean, congrats on the record number of orders, but man, that pop sold off. Might be something to look at right at open. Let's see, because there are some stocks where they will like go and fire up and they'll come back down, but then at open they just get bought the heck up. I think Starbucks did that and a few other ones. So still worth keeping an eye on here. Dash. Let's see. Yeah, if we can get like a little peak below and fail on Dash with that recent pre-market low, wouldn't be mad at it. Like looking to go long, like 86. If Dash comes down, test that 86 area, in the 5 minute, maybe closes beneath, but then gets back above. I do like Dash to the upside actually. So we'll keep an eye out for that. Could make for a nice little scalp here this morning. I'll set a little alert there as well. Make for a nice fun scalp. I haven't traded DoorDash in a bit. So let's see here. Yeah, we'll set that low at what? 86.03. So let's do that. Crossing market low. And I'll just put an alert on that for whenever we cross that level, just so that there we go. Of course, one goes off, but whenever we cross that level, then I'll be alerted for when we cross that low. But that's pretty much it, guys. And we've got a good amount of time until open, so I can go ahead and get this pre-market analysis in. Like I said, we roll into today bearish. The QQQ, the NASDAQ, has a double top potentially on the daily, right now. And if we lose, what is this level here? We lose 374.34, the NASDAQ can fire down big, right? The NASDAQ can fire down big. So just be prepared. The beautiful thing about options is that you can make money with both ways. So just like we made money to the downside on NVIDIA yesterday, we can move forward and make money off the downside of all these other stocks. Don't fear these stocks going down, make money off of it. And then when it's time to buy the dip, do it with a vengeance, right? These are the opportunities that you celebrate because it gives you opportunities to go long again, right? To get in on what you might have missed out on, which everybody wants, right? Second chances. So without further ado, that will wrap us up, put a bow on it, and take us out for this morning's pre-market prep session. Let's have a great rest of the day, right? Let's run it back, and I'll see you guys back here tomorrow morning for our last session of the week. Have a good one, people.